Good day, learners. Welcome to the part 2 of study session 4 on incomplete records and single entry. In the first part, I explained that incomplete record has to do with the various records that are kept in a single entry accounting system. And I said that the single entry accounting system is such that do not follow the double entry system. It's an accounting system where the person that owns the business does not have a proper understanding of bookkeeping and accounting, and as such does the recording in the way they feel it should be. But for tax purposes, businesses that operate on single entry are expected to ascertain their profits for tax purposes. So as such, accountants have devised a means of calculating or ascertaining profits in an incomplete record system. So this is a practical illustration of one Mr. Okpe that did not keep his account on a double entry basis, and he has consulted you as a bookkeeper to prepare the statement of profits based on the following information. Recall that I mentioned in the first part of this session or this study that to ascertain the profit in an incomplete record system, you have to ascertain or determine your closing capital and your opening capital. On the simple term, the profit in such system is the difference between the closing capital and the opening capital. If the closing capital is higher than the opening capital, then the business can say to have realized profit. But if reverse is the case, then we can say there's a loss. For emphasis sake, profit in a single entry system is usually arrived as opening capital minus closing capital rather minus opening capital plus drawings minus additional capital. To arrive at our profit, we have to ascertain our closing capital, the opening capital, the drawings if there is any, and subtract our additional capital. So based on this question, we'll pick each of the variables of in the equation. We pick it one after the other to arrive at our profits. So let's start by ascertaining our opening capital. I said to get our opening capital, it is important that we prepare the opening statement of affairs. Now, on the other side, you see the opening statement of affairs as at 1st of January 2019. I said to get the capital, remember, we still use the accounting equation, and the accounting equation says capital is the difference between assets and liabilities. So asset minus liabilities will give us our capital. So at the beginning of the year, you can see furniture and fitting cost 2,000 naira. We have motor van at 3,600 naira. Motor van at 3,600 naira. We have inventory at the beginning of the year to be 20,400 naira. Now, in ascertaining our opening capital, we start by highlighting the assets. The assets that we have at the beginning of the year, we have furniture and fittings. You can see that's the first item in the question. That's 2,000 naira at the beginning of the year. The next asset, we have motor van. That's the third item there at 3,600 naira at the beginning of the year. The next one, we have receivables at 12,400 naira. That's the sixth item there. Then we have bills receivable, the second to the last, which is 3,100 naira. There's inventory, that's the fourth item there, that's 20,400 naira. Then there's a cash of 400 naira at the beginning of the year. If you sum all of this together, all the assets, we have a total of 41,900 naira as the assets at the beginning of the year. Then we deduct our liabilities from the assets. In the liabilities that we have there, we have bank overdraft of 18,000 naira at the beginning of the year, followed by payables of 9,120 naira, then bills payable of 2,210 naira. If you sum all of these liabilities together, it gives a total of 29,330 naira. And if you deduct the liabilities from the assets, we'll be having 12,570 naira as the opening capital of Mr. Okpe at the beginning of year 2019. Now, we've been able to ascertain our opening capital, which is 12,570 naira. The next component of the profit equation, or the next variable, is the closing capital, which we have to determine by preparing the closing statement of affairs as at 31st December 2019. All right, now the next thing is for us to ascertain our closing capital, and to get that we have to prepare the closing statement of affairs. Now you need to pay attention to details that the figure at the beginning of the year, or the figure that were used to derive the opening capital, is not the same. It's not the same figure we will use to ascertain the closing capital. For instance, we have furniture and fitting of 2,000 naira at the beginning of the year. At the end of the year, we have furniture and fitting to be also 2,000 naira. But there is an information in the latter part of the question that Mr. Okpe had agreed to depreciate assets, to depreciate furniture and fittings at 10% and also motor van at 10%. So that means that at the end of the year, motor van has depreciated in value to the tune of 200 naira. So the value of motor van at the end of the year is 1,800 naira. That is 2,000 naira minus depreciation of 200 naira. The same thing applies to motor van. Motor van at the beginning of the year was 3,600 naira, but he also agreed to depreciate it at 10%, which is 360 naira. If you deduct 360 from 3,600 naira, the motor van value at the end of that financial year will be 3,240 naira. The next item of asset is receivables. From the question, that is December 2019, receivable was estimated to be 9,800 naira. But there's an additional information that Mr. Okpe agreed to write off a bad debt of 600 naira, meaning that he had 3,200 naira to receive before, but 600 naira has gone bad out of his receivable. So it means that Mr. Okpe will be expecting to receive 2,000 payables at the end of the year was 9,800 naira. But there's an additional information that Mr. Okpe had agreed to write off 600 naira as bad debt. So it means that receivable at the end of the year will now be 9,800 naira minus the bad debt. 9,800 naira minus bad debt. So that gives us 9,200 naira as receivable at the end of the year. Then there's bill receivable of 3,200 naira at the end of the year. Then we have inventory of 22,400 naira, and the last item, the last asset that we have there is cash, which is 1,690 naira at the end of the year. If you sum all of this together, it gives a total of 41,530 as assets at the end of the year. Then the other aspect is to find the total liabilities. The total liabilities is comprised of bank overdraft. At the end of the year, the bank overdraft is valued or stood at 14,000 naira. We have bills receivable of 8,400 naira and payables of 8,400 naira and bills payable of 2,200 naira. If you sum all of the liabilities together, it gives a total of 24,600 naira. And following the accounting equation, that capital is asset minus liability. So the total asset at the beginning of the year, 41,530. If you deduct the total liabilities of 24,600 naira, then the closing capital is 16,930 naira. From this, we have been able to ascertain our opening capital, which is 12,570. We have been able to ascertain the closing capital, which is 16,930. Then the next thing for us is to check if there is an additional capital. In the additional information, we see that in June 2018, Mr. Okpe introduced additional capital of 2,000 naira. So there's an additional capital of 2,000 naira, and we have to check again if there is drawings. And also we have the information that there is a total drawings in cash of 800 naira and inventory, which is 240 naira. So we have drawings of 8,000 and 240. With this information, we can now prepare the statement of profit of Mr. Okpe for the year ended 31st December 2019. All right, now the next thing is for us to ascertain our profit, having been able to derive all the variables that we need. The profit is usually the closing capital plus drawings minus opening capital, then minus any additional capital introduced. From the last statement of affairs we prepared, we were able to derive 16,930 as the closing capital. We have the information that drawings for the year were 8,000 naira in cash and 240 as stock. So the total drawings amounted to 8,240 naira. So if you had the closing capital with the drawings, that gives a total of 25,170. Then you deduct your opening capital, which was 12,570 from the opening statement of affairs, an additional capital of 2,000 naira. You deduct the two. If you subtract these two from 25,170, it gives a profit of 10,600 naira. So the profit of Mr. Okpe for year 2019 is 10,600 naira. We can go further by now preparing a proper statement of financial position of Mr. Okpe as at 31st December 2019. You see that now we can now prepare the final balance sheet or statement of financial position of Mr. Okpe. We have the assets. The furniture was 2,000 naira. After deducting depreciation of 200, we have 1,800 naira. The same applies to motor van. So we have a carrying amount of 3,240 at the end of the year. The total sum of our non-current assets is 5,040 naira. We arrive at this by just subtracting depreciation from the balance brought forward. The current assets, we have inventory at the end of the year to be 22,400 naira. Receivables, as explained earlier while preparing our closing statement of affairs, the bill receivable at the end of the year, the cash, if you sum all of these, we have 36,490. So the total assets is 5,040 naira with 36,490 gives a total of 41,530. The equity and liability side, we start with our opening capital. The opening capital, as earlier derived, is 12,570. Then we had additional capital during the year, which is 2,000 naira. Then the profit that we are derived was 10,600 naira. If you subtract drawings of 8,240, we have a total equity of 16,930. The liabilities at the end of the year consist of bank overdraft of 14,000 naira. payables of 8,400 naira and bills payable of 2,200 naira. If you sum the liabilities together, it gives a total of 24,600 naira. When you add that to the equity, the total equity and liabilities will amount to 41,530, which is also equal to the total assets. Thank you for listening. I shall continue the complete question on single entry soon.